It is time for the bottom line, our daily look at what's going on in the business world and beyond. I was feeling pretty good about February so far. The markets had put up 2 winning weeks in a row. And then we got a day like this. The Dow lost 503 points today. Still concerned about the Fed's upcoming rate hike. Not so happy about the news out of Ukraine. Let's bring in Investopedia editor-in-chief Caleb Silver to wrap up the week. So, Caleb, I know inflation is the headliner, but before we dig into that and what the Fed's going to do, I would love your take on stocks so far this month. Wall Street, at least to me, has been feeling much less wobbly than it was feeling in January, at least until yesterday and today. What's your take here?
Yeah, good to be with you, Allison. I think investors are looking for a reason to believe, but there are so many things that are making them doubt that we're going to have some progress here. We're going to have good earnings from companies going forward. The economy is going to be okay. The Fed is going to be able to thread the needle. So any opportunity to sell, any inkling of fear, you're seeing big sell-offs in the market. Yeah, we've had some big days. We've had some good reports from the Microsofts of the world and other companies. But in general, I think investors are right on edge here looking for any reason to sell. And that press conference this afternoon with the United States foreign minister talking about Ukraine and Russia and the escalation there, that was all it needed. That turned ugly real fast because it wasn't that bad of a day today, but stocks sold off real hard in the last hour and a half.
Yeah, so let's talk about inflation. We can't avoid that one this week. Those numbers, we're up 7.5% on the year. Consumer prices up 0.6% for January. Food, energy, shelter, all more expensive. I'm going to take a page out of your songbook, Caleb, and quote Martha Reeves and the Vandellas here and say there's really nowhere to run, nowhere to hide. Prices are up across the board. Should we expect these kinds of price hikes in February, maybe even March, until the Fed rate hikes start to kick in?
Well, the Fed rate hikes haven't kicked in. They're coming in a month, as you say, but the stock market's behaving like they've already happened. But yes, raising interest rates is going to cool down prices. It's going to cool inflation down. It's already changed the temperature in the stock market because it makes those borrowing costs rise for companies, and it makes those borrowing costs rise for consumers as well. So everything from your credit card to a mortgage payment that's not fixed or a car payment, that's going to be affected by that. But we're also going to see a cooling of prices in some areas, but probably not food, Allison. The USDA is saying that higher prices for food are going to be with us for a while. Why? Because it costs a lot of energy to make food and to transport food, and the costs for fertilizer are going up. So food is going to be with us for a while. That's a core part of our inflationary problems right now, and that's not going anywhere.
Caleb, CNBC's Steve Leisman spoke to several Fed officials who told him they don't think a half-point rate hike in March is appropriate. Forgive me for asking the obvious question here, but with inflation this out of control, why the hell not?
Yeah, I know. Why not go as hard as you can, as soon as you can, and get it out of the way? Because investors don't like that uncertainty. Quarter point here, quarter point there, 3 rate hikes, 6 rate hikes. The Fed has usually been pretty transparent, but not lately. It's been really wishy-washy on how to solve this problem. It's got to thread the needle here by cooling the economy down, but not raising rates so much that it scares off consumers. And consumers are already scared. We got the consumer sentiment number today, Allison, 10-year low for that. We got retail sales coming out next week. I don't know if they're going to be that strong because consumers are starting to back away from those high prices right now. It's starting in the housing market. It's going to move its way down the economic ladder until they stop spending outright.
All right, Caleb, hit us with a new vocab word to use over Valentine's Day, cocktails with our sweethearts this weekend, or when we run out of things to say about the football game at halftime on Super Bowl Sunday. What is your Investopedia term of the week?
Yeah, well, this isn't for pillow talk, but it is the flattening yield curve. And that is when long-term rates and short-term rates start to catch up with each other. It's a sign that investors think the near-term economic prospects are pretty dim. We're going to have a troubling next year or two in the economy. Long-term, they have confidence in it. But because of inflation and because of the uncertainty around rates, you're getting the flattening yield curve. And that's usually not a great sign of things to come.
All right, Caleb, we got to run. Looks like you have an amazing setup there for the weekend. Have a great one. We'll catch you next week.
Thank you.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.